Well, folks, happy almost New Year. Here we are coming up on 2011, as you well know. And of course, what do we start seeing around this time of the year? Well, we start seeing magazine covers that look like this. How to make money in 2011. You know, they're talking about in Money Magazine that you need more stocks and less bonds in 2011. Well, the funny thing is they had a very similar looking, that's actually their 2010 cover. You'd think that their creative people would actually come up with maybe a little different cover design, but no, they used pretty much the same one they did last year and pretty much the same content, which is to give you a prediction on what's going to happen over the coming year. Well, might I remind you, this was an email that I received earlier in 2010. This is the kind of stuff that we heard earlier in 2010. There's a ticking time bomb in your portfolio. A client actually emailed this and said, "Oh, Paul, get a kick out of this." And he was right, I did get a kick out of it. But basically, the title of the email was "The Crash of 2010 is Coming." Now, how did 2010 turn out? Well, unless something really drastic happens, either the rest of today, which is Thursday, the 30th, or tomorrow, I would say it turned out fairly well. Now, what they're actually trying to get you to do, of course, is time the market, as I always say, is a bad thing. Anytime you're changing the mix of your portfolio based on some prediction, you're timing the market. Now, it's very tempting to look at the bonds now and say, well, yeah, bonds, it's just terrible. Interest rates, what direction can they go? Well, up. Well, that is why we use shorter-term bonds in the investment portfolio, is that if we have big increases in interest rates, it won't really affect it that much, number one. Number two, really when you look at a lot of the newspaper articles right now, like for example, the Wall Street Journal, Wednesday's Wall Street Journal, stock markets are poised to steal the show in the next year. Now, technically, in a year where they're predicting the market is going up, actually the odds are in their favor. Because if we look at it statistically, 85% of the time, or 75% of the time, excuse me, markets, as in large U.S. stocks, go up in value. About 85% of the times, if you're diversified, a portfolio will go up in value if you own more asset categories. So statistically, the odds are in their favor that they're going to be right, that it'll be a good year for the stock market in 2011. But you don't want to get overconfident. You don't want to change your portfolio mix based on some prediction of the future, especially if you're in need of income now. So as far as magazines go, I think it's interesting that they at least have the integrity to use a crystal ball on the cover, showing that it is just a guess or it is just a gamble as far as when they're trying to predict the future. Have a great new year, and we'll catch you on the other side.